Question 1. In the context of risk management and policy structure, Mr. Patel owns a commercial building in Boston and is evaluating various risk handling techniques to decide how to insure. He considers retention, self-insurance, risk transfer insurance, and risk financing. Which approach best addresses low-severity, high-frequency risks while balancing Massachusetts commercial property coinsurance requirements? A. Transfer that risk entirely to an insurer to avoid financial uncertainty. B. Retain the risk by increasing self-insurance since high-frequency losses have small impact. C. Finance the risk via risk pooling among similar businesses in Massachusetts. D. Share the risk with captive insurer to meet coinsurance thresholds. Answer. Correct answer. B. Explanation. Small frequent losses, e.g. minor water damage, are often best retained self-insured to avoid high premium costs and insurer moral hazard. Massachusetts commercial property coinsurance rules, typically 80% or 90% of insurable value, require maintaining adequate coverage, but you don't need to transfer minor risks. Retention helps reduce adverse selection and keeps premiums lower. Risk pooling. Captives C, D can be cost-effective for large or catastrophic exposures, not typical small loss frequent risk. Full transfer A is cost inefficient. Question 2. Considering the evidence of misrepresentation and utmost good faith, Rivera applies for liability coverage for her dry cleaning business in Lowell. She omits past customer litigation over chemical spills. Under Massachusetts law, how does this omission affect contract validity? A. It represents concealment that voids the contract. B. It's immaterial unless insurer specifically inquired. C. It cannot void the policy because Massachusetts rejects the concealment doctrine. D. It's a stopel preventing the insurer from voiding. Answer. Correct answer A. Explanation. Insurance is the contract of utmost good faith, requiring full disclosure of material facts. In Massachusetts, failure to disclose past litigation tied to operational hazards is concealment or misrepresentation, allowing the insurer to void or rescind the policy. Even unasked omissions can be material if they influence underwriting. Estoppel D and immateriality B are inapplicable because courts allow rescission when material non-disclosures exist. Massachusetts statutory and case law uphold insurers' right to void for concealment. Question 3. Under the assumption that Mr. Chang needs business income and extra expense coverage for his restaurant in Cambridge after a fire, he lost income during rebuilding. If coinsurance applies, what valuation principles and recovery limits determine the indemnity amount? A. Actual cash value minus deductible, limited by waiting period. B. Replacement cost of lost income plus extra expense, subject to 8, 12, or 12, 24 coinsurance percentage. C. Agreed value of gross receipts with no coinsurance penalty. D. Stated amount up to a specified monthly limit prorated by coinsurance. Answer. Correct answer. B. Explanation. Business income policies calculate indemnity based on actual net income and extra expenses necessary to continue operations up to coverage limit. Coinsurance e.g. 8, 12, or 12, 24 monthly indemnity sublimits apply similarly to property. The insured must carry specified percentage of gross earnings limit. If underinsured, the recovery is proportionally reduced. Replacement cost isn't property valuation here, but covers restoration of income stream. SCVA isn't used for income coverage. Agreed or stated value forms rarely apply. Question 4. From multiple perspectives of commercial general liability, CGL Dr. Ahmed operates a medical clinic in Worcester and purchased both occurrence and claims made endorsements. Patient sues for malpractice after the retroactive date, but the claim is filed after the policy expired. Which form provides coverage and why? A. Occurrence form covers because incident occurred during policy period. B. Claims made form covers because suit filed within the discovery period. C. Occurrence form doesn't cover because retroactive date limits apply. D. Neither covers because malpractice must be reported within 30 days. Answer. Correct answer. B. Explanation. Occurrence form covers incidents that occur during policy period regardless of when suit is filed. A claims-made form covers claims first reported during policy period or extended reporting period and after retroactive date. Since the incident occurred after the retroactive date, the claim-made form covers if the claim was reported in the period or extended reporting window. Occurrence form applies only if purchased separately. Mass-specific malpractice regulation demands compliance with reporting timelines, so D. No coverage. Question 5. As demonstrated by Massachusetts DOI guidelines, Green is an independent commercial lines producer. She receives a $200 incentive from an insurer to induce new business. According to state market conduct regulation, what is the correct assessment? A. It's permitted as rebidding if disclosed in writing. B. It's considered twisting and is prohibited. C. It's illegal producer incentive. D. It's illegal rebidding unless offered equally to all producers. Answer. Correct answer. D. Explanation. Massachusetts prohibits rebidding, offering benefits or inducements not specified in the policy. E.g. money gifts, unless offered to all producers or insureds equally in strict accordance with law. Incentives tied to placement of business and not disclosed broadly constitute unlawful rebidding, not twisting, which involves misrepresentation. Even if disclosed, individualized incentives violate consumer protection regulations unless allowed uniformly and documented. Question 6. A key distinction between inland marine and property policies arises in Is Hernandez's trucking business in Springfield. She asks whether accounts receivable coverage inland marine applies to her business personal property stored on site. Which conceptual principle best explains coverage difference? A. Inland marine only covers goods in transit, not stored property. B. Inland marine covers property of others but not accounts receivable. C. Inland marine covers mobile, movable, instrumentalities of transportation or communication, while property forms cover fixed exposures. D. Inland marine and property forms are interchangeable under Massachusetts law. Answer. Correct answer. C. Explanation. Inland marine insurance originally covered property in transit or movable property used in transportation communication. Today includes accounts receivable, valuable papers, contractors' equipment. Massachusetts property forms E.D. BPP cover fixed exposures at scheduled premises. Thus, inland marine is appropriate for mobile or transit exposures. Property forms cover static exposures. Conceptual difference governs selection. They are not interchangeable. An accounts receivable is not peril but an inland marine form. Question 7. Under the assumption that Is Fong's commercial auto fleet policy in Massachusetts must comply with the Motor Carrier Act of 1980, she leases vehicles to third parties. What liability coverage minimums and endorsements must she include? A. Statutory state limits only with hired and non-owned auto endorsement. B. Federal and CS90 endorsement, any limits, with hired and unowned coverage. C. Only uninsured motorist coverage is required. D. No special endorsement is needed under standard BACF. Answer. Correct answer. B. Explanation. Under the Motor Carrier Act, commercial motor carriers transporting regulated commodities must file the MCS90 endorsement to guarantee payment of judgments regardless of limits. Massachusetts requires state liability minimums plus handle hired and unowned autos where appropriate. Without MCS90, the insurer could disclaim defense. This endorsement ensures compliance regardless of actual limits. Standard BACF does not automatically meet these federal obligations. Question 8. While examining the development of W2 class of Massachusetts producers, Mr. O'Malley is licensed as both an agent and broker. Client wants policy that one insurer decline. What duties and conflicts must he understand under Massachusetts law in placing that risk? A. As an agent, he can bind coverage only through insurer appointment. B. As broker, he owes fiduciary duty to the insurer. C. He may owe duty to either client or carrier depending on appointment status. D. Massachusetts law doesn't distinguish agent or broker roles. Answer. Correct answer. C. Explanation. In Massachusetts, agents are appointed and represent the insurer. Brokers represent the client and can go to multiple insurers. As Mr. O'Malley functions in both capacities, the duty and obligation depend on role in the transaction. Fiduciary to the insurer as agent, to the insured as broker. He must disclose conflicts and act in the client's best interest when brokering. Massachusetts DOI requires clarity on role and prohibits misrepresentation of capacity. Question 9. To what extent does coverage trigger in a commercial general liability policy when ISDAIS's signage collapses and injures pedestrian? She has both products and completed operations and premises and operations exposures. Which conceptual rule applies? A. The collapse is premises liability incident, not products. B. It's products and completed operations because the sign is product. C. It triggers both coverages and duplicates. D. It's excluded under both because signs are not covered property. Answer. Correct answer A. Explanation. Premises and operations cover bodily injury or property damage arising from physical premise operations of the insured. A collapsed commercial sign on property causing injury is a premises liability. Products and completed operations applies after products are sold or operations finished and off premises, e.g. installation liability for services. No coverage duplication occurs. The policy treats it as premises related. Massachusetts Policy Form CG Euro 1 standard applies. Question 10. During the process of underwriting for Ista Walsh's warehouse in Lawrence, the insurer discovers discrepancies in occupancy use storage versus light manufacturing. What underwriting principle and Massachusetts policy condition would justify cancellation or non-renewal? A. Assignment clause because occupancy changed. B. Material misrepresentation of exposure voids the contract. C. Other insurance clause declining coverage overlap. D. Policy condition 60-day notice for renewal. Answer. Correct answer. B. Explanation. Underwriting depends on accurate exposure descriptions, misrepresenting occupancy. G. Classifying light manufacturing as storage is a material misrepresentation affecting hazard classification and premium. Massachusetts policy conditions allow cancellation or non-renewal when there's material change or misrepresentation regarding risk. Assignment clause concerns transfer of insured's rights, not occupancy. Notice for renewal D addresses timeline, not justification. Whether insurance C irrelevant here. Question 11. Through careful analysis of insurance contracts, Ista Barrows, the owner of a distribution center in Brockton, reviews the cancellation clause in his commercial package policy his insurer issues. A cancellation notice mid-policy terms citing material increase in hazard. What governs the insurer's right to cancel under Massachusetts law? A. The insurer must provide at least 10 days notice and document underwriting re-evaluation. B. The insurer can only cancel at renewal, not midterm. C. The insurer may cancel midterm if there's substantial increase in risk with 45 days notice. D. The insurer may cancel with 20 days notice only if non-payment occurs. Answer. Correct answer. C. Explanation. Massachusetts General Law Chapter 175 SSC allows midterm cancellation of commercial policies due to substantial increase in hazard, with written notice issued at least 45 days in advance, while 10-day notice applies to non-payment as in D. Other material risk factors like occupancy changes or fire risk escalation fall under broader cancellation rights. The policyholder must written notification with specific grounds. Notice and timing requirements are strictly regulated to protect commercial insureds. Question 12. A critical examination of commercial property valuation finds that Isleone's warehouse in Framingham was insured at 60% of its replacement cost. A fire causes $200,000 in damages. If the policy includes an 80% coinsurance clause, what will the insurer pay, ignoring deductible? A. $200,000. B. $150,000. C. $120,000. D. $100,000. Answer. Correct answer. B. Explanation. Coinsurance penalty applies when insured value is below the required percentage. Required coverage equals 80% x replacement cost. If insured amount is 60% of RC, the recovery is calculated by payment equals insured amount required amount x loss text payment equals left frac text insured amount text required amount right x text loss payment equals required amount x loss assuming full replacement cost is $400,000 required is $320,000 If only $240,000 was insured, 60% insurer pays. 240,320,000 at X equals 150,000. 240,320,000 x 200,000 equals 150,000. 204,320,000 x equals 150,000. This demonstrates the penalty due to underinsurance as per ISO commercial property policy conditions and valuation standards. Question 13. As a result of increased cyber threats, Mr. Kim purchases a cyber liability policy for his small software company in Worcester. After a ransomware attack, his business suffers both extortion payments and system downtime. Which of the following best describes the coverage categories likely triggered in this scenario? A. Media liability and bodily injury. B. Regulatory fines and business auto. C. Extortion and network interruption coverage. D. EO and umbrella liability. Answer. Correct answer. See explanation. Cyber liability policies generally include coverage for cyber extortion, ransomware, and business interruption network downtime due to cyber incidents. These specific triggers are first-party coverage. Media liability A covers defamation, copyright violations. Bodily injury, auto or umbrella B and D are unrelated unless additional damage or liability exists. Massachusetts increasingly include these provisions in commercial cyber endorsements due to growing regulatory concerns, e.g. 201 CMR 17.0 data security rules. Question 14. In comparison with other liability exposures, is Coldwell operates a catering company and serves alcohol at events. If an intoxicated guest causes injury, which coverage under her EGL policy might protect her, assuming no separate liquor license? A. Personal and advertising injury coverage. B. Medical payments under coverage. C. Host liquor liability under coverage. A. D. Products and completed operations coverage. Answer. Correct answer. C. Explanation. Host liquor liability under coverage out of the CGL policy applies to non-businesses or businesses not in the alcohol business serving incidental alcohol. Is Coldwell, assuming alcohol service is incidental, would be covered under host liquor liability. If she was in the alcohol business, she'd need separate liquor liability, excluded in standard CGL. Coverage B, advertising personal injury, and C, medical payments are not relevant here. Massachusetts courts uphold exclusions unless properly endorsed. Question 15. The traditional approach to indemnity and crime insurance policies would most likely address which of the following scenarios involving Ista Singh's retail store in Springfield? A. Losses due to fire in an adjacent building. B. Employee theft of merchandise over 6 months. C. Disruption of business due to supply chain interruption. D. Property stolen from customer's vehicle off-site. Answer. Correct answer. B. Explanation. Crime insurance, particularly under the employee dishonesty form, covers losses caused by theft or embezzlement by employees. This form responds to ongoing internal theft that property policies do not cover. Fire losses, they fall under property. A supply chain disruption, C, under business income contingent business interruption. The theft from customer vehicles, D, generally not covered unless explicitly endorsed. DOI recognizes employee dishonesty as one of the key risk exposures requiring specialty crime coverage. Question 16. The implications of improper producer conduct become evident when Isitran, a licensed broker, fails to notify a client about a lapse in coverage. The client suffers a large uninsured loss. Under Massachusetts law, what legal or regulatory consequence might Isitran face? A. Suspension or revocation of license by the commissioner. B. No consequences unless fraud can be proven. C. Criminal penalties under the Insurance Fraud Bureau. D. Civil immunity under producer-client fiduciary statutes. Answer. Correct answer. A. Explanation. Under M.G.L. Chapter 175 SSR, the Massachusetts Division of Insurance may revoke, suspend, or refuse to renew license for incompetence, misrepresentation, or failure to act in fiduciary capacity. Isitran's failure to act diligently and inform her client constitutes gross negligence or incompetence. Criminal penalties, C, require intent to defraud. B is incorrect because negligence is enough. There is no civil immunity. D. Brokers owe clients fiduciary duty under Massachusetts law. Question 17. In light of recent developments in environmental law, Isto Spinoza operates a manufacturing facility and wants to protect against third-party claims arising from accidental release of hazardous substances. Which commercial insurance policy most directly addresses this risk? A. Employment practices liability insurance. B. Commercial property pollution endorsement. C. Commercial general liability with pollution liability endorsement. D. Cyber liability policy. Answer. Correct answer. C. Explanation. CGL policies exclude most pollution exposures unless endorsed. The pollution liability endorsement, CG 422 or equivalent, modifies exclusions to allow limited coverage for accidental sudden pollution events. Property insurance, B, may cover cleanup costs for first-party property only, not liability. IPI and Cyber 8D are irrelevant. Massachusetts, DEP, and Federals. Guidelines emphasize liability for environmental harm, reinforcing the importance of pollution endorsements for manufacturers. Question 18. A detailed analysis of CGL policy structure shows Isto Nolan's policy includes an aggregate limit of $2 million and per occurrence limit of $1 million. He has two liability claims this year, one for $700,000 and another for $1.2 million. What will the insurer pay in total? A. $2 million. B. $1,900,000. C. $1,700,000. D. $1 million. Answer. Correct answer. C. Explanation. Per occurrence limit caps each individual claim. So, the first claim, $700,000, is fully paid. The second is capped at $1 million per occurrence limit. Total paid equals $700,000 plus $1 million equals $1,700,000. The aggregate cap is $2 million, which is not exceeded. Insured retains $200,000 for second claim. Standard is CGL policies outline these limits, and the Massachusetts DOI requires disclosure of aggregate and per claim maximums in consumer-facing policy summaries. Question 19. From a practical standpoint, Is O'Connor, who owns an events company, asks whether commercial umbrella liability will defend own lawsuit if her CGL policy is exhausted, which is true regarding how umbrella coverage responds. A. It only applies to bodily injury, not personal injury. B. It follows form and can drop down to defend excluded claims. C. It excludes defense costs unless written in excess of auto liability. D. It duplicates CGL coverage and creates overlaps. Answer. Correct answer. B. Explanation. Commercial umbrella policies are designed to provide excess coverage over primary policies and can offer drop-down coverage in certain cases where exclusions in the primary policy do not apply to the umbrella. They also cover defense costs if the umbrella policy is triggered. It does not duplicate or overlap, but rather extends limits or fills exclusions. Insurers often require proof of adequate primary coverage, issuing umbrella limits. Question 20. Throughout the course of a complex building renovation project, Isto Rodriguez needs to protect his contractor's equipment, backhoes, compressors, lifts. Which policy best provides this protection while it is stored at the job site and in transit? A. Commercial general liability policy. B. Inland marine contractor's equipment floater. C. Builder's risk endorsement under commercial property. D. Business auto policy BAP. Answer. Correct answer. B. Explanation. The inland marine contractor's equipment floater provides coverage for contractor-owned machinery on or off premises in transit or temporarily at job sites. Builder's risk, C, only applies to buildings under construction, not equipment. CGLA addresses third-party liability, not first-party equipment damage. BAP D covers registered vehicles only. Massachusetts construction firms often rely equipment floaters endorsed with agreed value or CV valuation to meet risk financing requirements. Question 21. Taking into account the structure of a commercial package poly CPP, Isto Delgado owns multiple retail shops and wants one policy to cover property liability and crime, his insurer suggests. Instead of multiple monoline policies, what is a key advantage of using an EE in this scenario? A. It avoids mandatory underwriting scrutiny for each location. B. It ensures unlimited replacement cost valuation for all coverages. C. It allows modular customization and may offer premium discounts. D. It avoids coverage exclusions by combining multiple lines. Answer. Correct answer. See explanation. It provides flexibility, allowing businesses to tailor multiple coverage parts, e.g. property liability, crime, under one modular policy, often with better pricing and simplified administration. Each coverage part still has specific underwriting standards. It does not automatically override exclusions. D. Nor guarantee replacement cost. B. Massachusetts insurers must still review each location for underwriting. A. CPPS are governed by ISO forms and Division of Insurance Policy Form regulations. Question 22. The prevailing attitude toward residual markets is illustrated when Mr. Jenkins, who operates a commercial towing service, is denied coverage in the voluntary market. What option is available in Massachusetts to secure mandatory liability insurance? A. Apply through the Massachusetts Property Insurance Underwriting Association. B. Obtain coverage through the assigned risk plan. C. File an appeal to the Department of Industrial Accidents. D. Purchase a commercial umbrella policy for primary liability. Answer. Correct answer. B. Explanation. In Massachusetts, the assigned risk plan, also known as the automobile insurance plan, provides liability coverage to businesses unable to obtain insurance in the standard market. This applies to commercial auto operators with high-risk profiles. MPUA handles property, not auto. Commercial umbrella D requires underlying policies and won't satisfy primary liability obligations. Department of Industrial Accidents. C. Deals with workers' comp disputes, not auto coverage. Question 23. What would happen if a Massachusetts commercial insured knowingly misrepresents material facts on a renewal application and a claim arises from the undisclosed risk? A. The policy remains valid because it was a renewal, not new business. B. The insurer may void the policy ab initio and deny the claim. C. The insurer is obligated to cover but may increase premiums. D. The insurer must pay the claim and sue for fraud afterward. Answer. Correct answer. B. Explanation. Material misrepresentation, whether on an initial application or renewal, is grounds for rescission of the policy from inception, void ab initio in Massachusetts. This is supported by case law in M.G.L.C. 176 SS Unfair Trade Practices. Insurers are not obligated to cover if the risk was materially misstated. Courts uphold this principle if the misrepresentation would have altered underwriting decisions. A. C. and D. Misstate legal doctrine around materiality. Question 24. Based on the information in a commercial general liability CGL policy, Mr. Romano sues a contractor who installed faulty electrical wiring. The work caused no damage but must be redone. Which best describes coverage under the contractor's standard CGL policy? A. Covered under products and completed operations liability. B. Excluded as pure work under business risk exclusions. C. Covered under contractual liability cause. D. Covered under equipment breakdown endorsement. Answer. Correct answer. B. Explanation. That due work exclusion in standard is CGL forms excludes coverage for damage to the insured's own work that must be redone due to poor workmanship. Since there was no third-party property damage or bodily injury, this is considered business risk, not fortuitous loss. Products and completed ops. A. Only applies if completed work causes other damage, equipment breakdown. D. And contractual liability. C. Don't apply here. Question 25. In contrast to personal lines, Auto Isterstein insures his fleet under a business auto coverage form BACF. One of his employees uses a company vehicle for unauthorized personal use and causes an accident. Under standard BACF, how is coverage affected? A. Coverage is denied due to non-business use. B. Coverage applies because employee had permissive use of the vehicle. C. Coverage applies only if vehicle is listed with a symbol 7. D. Coverage is provided only under a garage keeper's endorsement. Answer. Correct answer. B. Explanation. The BACF covers liability for vehicles when driven with permission, including personal use by employees, unless specifically excluded. Symbol 7 covers only listed autos, but permissive use can still be covered depending on policy language. Unauthorized use for illegal purposes may be excluded, but personal errands usually are not. Garage keepers. D. Pertains to customer vehicles, not owned autos. Massachusetts courts often uphold broad permissive use interpretations unless exclusions are clear. Question 26. Examining the consequences of negligence is Bianchi owns a hair salon and fails to clean a chemical spill causing a customer injury. Under CGL, which elements must be established for the insurer to provide liability coverage? A. Negligence, proximate cause, bodily injury. B. Breach of fiduciary duty, medical payments. C. Intentional harm, property damage. D. Strict liability, personal injury. Answer. Correct answer A. Explanation. For CGL liability to apply, a third party must allege bodily injury or property damage caused by the insured's negligence. Proximate cause links the action. E.g., failure to clean spill to the harm. Intentional acts are excluded. Medical payments. B. Are no-fault minor payments not requiring negligence. CGL does not cover fiduciary breach or strict liability unless specifically endorsed. Massachusetts law applies standard tort principles. Question 27. When presented with the opportunity to expand coverage, Mr. Grady considers adding a scheduled equipment to endorsement to his commercial property policy. How does this endorsement modify the standard building and personal property BPP coverage form? A. It provides blanket coverage across multiple locations. B. It excludes business personal property for named equipment. C. It enhances coverage by itemizing equipment and values separately. D. It converts SEV to replacement cost automatically. Answer. Correct answer. C. Explanation. Scheduled equipment endorsements list specific equipment and associated limits, giving enhanced and tailored protection beyond the general BPP blanket limit. This is common for high-value machinery or specialized tools. It does not convert valuation methods. D. Unless separately endorsed. Blanket coverage. A. Is the opposite concept. It also doesn't exclude BPP. B. But rather complements it, carving out equipment to be insured separately. Question 20. The most significant aspect of coinsurance in commercial property is its impact on claim payment. If Ms. Waters insures her property for $400,000 with an 80% coinsurance clause, but the replacement value is $600,000 and she incurs a $200,000 loss, what does she recover? A. $200,000. B. $166,667. C. $160,000. D. $120,000. Answer. Correct answer. B. Explanation. Coinsurance formula. Amount carried required amount x loss equals 400,000 for 180,000 nec x equals 166,667 text. Amount carried required amount x text loss equals 400,000 480,000 x 200,000 equals 166,667 amount required amount x loss equals 400,000 for 180,000 x equals 166,667 required equals 80% of $600,000 equals $480,000. She carried $400,000, so she didn't meet coinsurance. This penalty reduces the claim. This is common exam calculation to test coinsurance comprehension. BPP POP require insureds to meet coinsurance to avoid partial payments. Question 29. The development of cyber insurance in Massachusetts reflects modern exposures. If Mr. Levine's firm suffers breach affecting customer data stored by a third-party vendor, what factor determines if his cyber policy responds? A. Whether physical damage to servers occurred. B. Whether the breach was caused by an internal employee. C. Whether vendor liability is covered under third-party cyber liability. D. Whether he carries commercial umbrella policy. Answer. Correct answer. C. Explanation. Cyber liability policies often include third-party liability covering lawsuits or regulatory actions stemming from breached data, even when stored by vendors. It's critical to review language around outsourced data. Physical damage A. is irrelevant. Internal actor B. matters for crime or fidelity coverage. Umbrella policies D. rarely include cyber unless specially endorsed. Massachusetts Data Security Law 201 CMR 17.0 places responsibility on firms to safeguard personal info, even via vendors. Question 30. To better understand commercial umbrella liability, is you reviews that self-insured retention, cert calls, Under which circumstance would the SIR apply in her policy? A. When the umbrella covers a loss excluded by the underlying policy. B. When the underlying policy's deductible is exhausted. C. When the umbrella is written over another umbrella. D. When the umbrella replaces first dollar coverage. Answer. Correct answer A. Explanation. Self-insured retention, SIR, applies when the umbrella provides primary coverage, such as for a claim not covered by any underlying policy, but within the scope of the umbrella itself. A drop-down scenario is not the same as deductible. It does not apply when the umbrella sits over exhausted primary limits. B. Or other umbrellas. C. First dollar coverage. D. Is rare and only occurs when the SIR is met.